Today's 13th September for 37th market, currently trading an average bar, a low volume up about 5.83561. Now after the wide range bar, we see a series of small bars punctuated with opening gaps, and today's narrow range bars complete with actually much lower volume. So this is a sign of weakness, likely to actually pull back from here. Our resistance is at 3,600. This is the high made in 2018. Support is actually at about 3,500. So if you take a look at this resistance level, market is actually approaching there, and it's very likely to pull back from here. It's important to watch out for the quality of pullback. If we are shallow pullback, we may well attempt to break 3,600. Otherwise, we may see a retracement. We actually may bring it right down to 3,500. Let's take a look at the US market. This is S&P 500. After the strong bounce itself, you see the market actually loses momentum and there's a pullback followed by a counter attack here. What remains to be seen whether market can actually test this level here about 5650, and we'd like to actually see it test and followed by a shallow pullback, and in that case we may well break this resistance subsequent upward move. If you take a look at Nasdaq, quite similar patterns, though it's actually more volatile. We'd like to actually observe when you approach 18,000. If you can actually pull back at this level here or hold at this level followed by eventual break, that will be generally nice. So this is what happened on the daily charts. We are actually moving up to this level here, and we'd like to see what happens. We'd like to observe the reactions. This is the 10-year treasury yield, continue to be weakened, but you have recently actually broke this low here, so usually we do expect some kind of reactions, and after that it may continue its downward move. 1326 are actually well priced. This is Brent crude, mentioned before, bias towards the downside, and it was a break here, a violent break rather, and 70.71 is a very significant support level. So we notice tested on many occasions, and we see reactions at this level here. Very important is to see how far you actually throw back. It may actually continue to move forward, but this is the stubborn levels. Now breaking this level or closing decisively below $70 will generally indicate further downside move. Let's take a look at some of the stocks we'll be discussing. This is Singtel. Very nice break here, and for the last two sessions we have pullback, and this pullback is actually accompanied with low volume. This is a contraction setup. Bar high here is at 332. Notice the 1326 are well placed. These are actually very neat. Now SGX itself is experiencing a lot of volatility over the last few sessions. So if you take a look actually over here, stock is just inching up. You can see a series of overlapping bars, but this happens suddenly. This is a wide range bar followed by a gap, and obviously gap form part of this bar. This is an extension bar. The next day we see severe sell down on increased volume. Managed to reject the low eventually. So this is a consolation, but whatever the case, this deep retracements usually means that the stock will have to actually trade sideways before it present opportunity to actually break on the upside. Today itself, we do see stock actually making a low, assuming we avoid this, ignore this tail, and the volume is actually not that low. So we do expect further downward move, but by and large, it may actually consolidate sideways, especially after this strong move. So this is really an exhaustion move, as actually mentioned in the forum posting. So it's important for you to be able to recognize this extension bar and take profit at the close. If you miss that, at least on the next open itself, it's an opportunity to get up. So meanwhile, at this point in time, which I just have to leave the stock alone until it's complete its consolidation sets. So it's actually consolidating sideways before you actually attempt a weak breakout, followed by pullback, and the volume extremely low. This is actually healthy. It's a small deeper sap here. Bar high here is 376. SIA After a severe sell downs, we see this strong upward move. In fact, you managed to actually take out this resistance, is considered as nice. If you notice, this break itself accompanying a high volume, and today managed to follow through. Now this is a level you need to watch, the opposite end of this huge gap. The other thing we need to be mindful of are all this pivot. This presents us a resistance to upward move, and that is at about 665 or so. So at this point in time, we can look for pullback and look for new setups to go long. Now we also discussed Hong Kong Land, but unfortunately the pattern has been disrupted. So here we have very nice consolidation breakout followed by a pullback, and this one here is where the stock goes ex-div, managed to actually recover very quickly, one range bar, and over here experienced some weakness, but breaking this trend line itself is a clear sign that there's change in trend characteristics. And here we have a standard bounce to test this trend line, and today we have a wide range reversal bar. So with this wide range reversal bars, you will mean that actually there is short-term weakness. Important, we'd like to see whether this level can hold. Now breaking this level, this will be a double top formations. Look at the bank stock. This is DBS. Today trade a small body, didn't make a significant new high, more likely to pull back from here. During a pullback, look for setup. Be mindful of this overhead resistance. OCBC. It's pretty obvious, it's approaching this level here. I'd like to see whether there's pullback at this level. If there's a shallow pullback, look for a break on the upside. UOB. Much weaker stocks, but we see some recent upward move which actually in the process challenging this resistance level. This is a huge wide range reversal bar. The fact that it's trading a long dated doji, more likely to pull back from here, and during a pullback we can look for setup. Some of the small cap stock we'll be discussing, that is Centurion. Mentioned in a postings that there's weakening momentums, and this is what happens. We have a retracement here, but this retracement is pretty deep. Usually after a strong move like this, followed by equally quick retracements, stock likely to actually trade sideways, likely to see a couple of swing. So this will form a consolidation pattern. So I'd like to see what happens, and to see whether eventually the swing gets smaller and may well break on the upside. Hong Leong Asia. This stock has lower liquidity, so this is best traded on a weekly charts, but you can see the nice rounding patterns, and the high here is at 815. Look for decisive break on the weekly charts. So you can see this is a small deeper setup, so we need to see an increase in volume on the break. Nam Cheong. Yesterday we do have very strong upward move. Notice there's this opening gap, and today generally trade sideways at low volume. This is actually healthy. Look for a decisive break above the high of 385. Now Dynamics, actually the pattern has been actually damaged with these deep retracements. Right now there's an offer price to actually get it private, so we see this huge gap. So basically this is really not tradable because of these corporate actions. So by and large, actually the stocks we can leave it alone. We heard very strong upward move notice there's a huge gap here. This provides some level of support and follow. Despite this strong run up, the pullback is actually quite shallow. I would prefer if the stock can trade sideways, close out of daylight, because any break on the upsides is likely to be limited. So if the stock can trade sideways, close out of daylight, look for eventual break above high of 325.